Do you know the real cost of a fixed asset is often more than just the price you pay? In this video, you will learn what to include, what to exclude, and how to calculate the true cost of fixed assets with a simple example.
Cost of fixed assets. The cost of fixed asset comprises its purchase price and any directly attributable cost of bringing the asset to its working condition for its intended use. Any trade discounts and rebates are deducted in arriving at the purchase price. Cost of an item of property. Plant and equipment comprises its purchase price, including import duties and non-refundable purchase taxes, after deducting trade discounts and rebates. Any costs directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. The initial estimate of the costs of dismantling and removing the item and restoring the site on which it is located. The obligation for which an entity incurs, either when the item is acquired or as a consequence of having used the item during a particular period, for purposes other than to produce inventories during that period. The recognition of an item as an intangible asset requires an entity to demonstrate that the item meets A, the definition of an intangible asset, and B, the recognition criteria. This requirement applies to costs incurred initially to acquire or internally generate an intangible asset, and those incurred subsequently to add to, replace part of, or service it. An asset meets the identifiability criterion in the definition of an intangible asset when it A, is separable, is capable of being separated or divided from the entity and sold, transferred, licensed, rented, or exchanged, either individually or together with a related contract, asset, or liability. Or B, arises from contractual or other legal rights, regardless of whether those rights are transferable or separable from the entity, or from other rights and obligations. An intangible asset shall be recognized if and only if it is probable that the expected future economic benefits that are attributable to the asset will flow to the entity, and the cost of the asset can be measured reliably. Let's understand some of the examples of directly attributable costs. Number 1, cost for site preparation. Number 2, initial delivery and handling costs. Number 3, installation cost, such as special foundations for plant. Number 4, professional fees, like fees of architects and engineers. Number 5, taxes, like import duties, value-added tax, VAT, etc. Number 6, carriage inward, transportation charges for bringing the assets to site. Administration and other general overhead expenses are usually excluded from the cost of fixed assets because they do not relate to a specific fixed asset. However, in some circumstances, such expenses as are specifically attributable to construction of a project or to the acquisition of a fixed asset or bringing it to its working condition may be included as part of the cost of the construction project or as a part of the cost of the fixed asset. The expenditure incurred on startup and commissioning of the project is capitalized as the construction cost. However, the expenditure incurred after the plant has begun commercial production intended for sale, is not capitalized and is treated as revenue expenditure. When a fixed asset is acquired in exchange for another asset, its cost is usually determined by reference to the fair market value of the assets given as consideration. It may be appropriate to consider the fair market value of the asset acquired if this is more clearly evident. When a fixed asset is acquired in exchange for shares or other securities in the enterprise, it is usually recorded at its fair market value, or the fair market value of the securities issued, whichever is more clearly evident. As defined by AS 10, fair market value is the price that would be agreed to in an open and unrestricted market between knowledgeable and willing parties, dealing at arm's length, who are fully informed and are not under any compulsion to transact. An alternative accounting treatment that is sometimes used for an exchange of assets, particularly when the assets exchanged are similar, is to record the asset acquired at the net book value of the asset given up. In such case, an adjustment is made for any balancing, receipt, or payment of cash, or other consideration. Only expenditure that increases the future benefits from the existing asset beyond its previously assessed standard of performance is included in the gross book value. Example, an increase in capacity. The cost of an addition or extension to an existing asset, which is of a capital nature and which becomes an integral part of the existing asset, is usually added to its gross book value. Any addition or extension which has a separate identity and is capable of being used after the existing asset is disposed of is accounted for separately. Let us understand the calculation of cost of fixed assets with the help of following illustration. The Arena Industries acquires a machine, details of which are as follows. List price $40,000. Trade discount $1,500. Value added tax VAT $8,000. Transit insurance $240. Freight inward $800. Annual maintenance cost $5,500. Installation charges $2,400. Estimated scrap value $3,800. calculate the cost of acquisition of machine.
Now let's find out the solution. List price, $40,000. Less trade discount, $1,500. Net price, $38,500. Add VAT, $8,000. Transit insurance, $240. Freight, $800. Installation charges, $2,400. Cost of acquisition, $49,940.
Thank you for watching, guys. If you found this video helpful, hit that like button and leave your valuable advice below. And please subscribe to our YouTube channel so you never miss an update, and share it with your friends.